All right, so you want to understand ROI better,
Yep.
and we are here to help you do just that.
Absolutely.
We got this awesome guide from World Insider,
Okay.
fresh off the press from December 7th, 2024.
Great.
Think of this deep dive as like your crash course
Okay.
in figuring out if something is worth your hard-earned cash,
Makes sense.
stocks,
Huh.
real estate,
Yeah.
even that top-of-the-line coffee maker you've been eyeing.
Oh, yeah.
ROI can help you make the call.
It's fascinating how ROI can cut through all the clutter and give you a clear picture of what's truly profitable.
Mm,
Imagine you have like $1,000 to invest.
okay.
Would you rather put it in a savings account earning a measly 2% interest
Right.
or buy a piece of art that you're convinced will double in value in 5 years?
Okay.
ROI helps you answer that question objectively,
Interesting.
even though the investments are totally different.
So it's not just about making money.
Right.
It's about making the most money with what you have.
Exactly. It's about comparing different opportunities and figuring out which one gives you the biggest bang for your buck.
Mm-hmm.
Now, don't get me wrong.
Okay.
ROI isn't the be-all and end-all of decision-making.
Right.
It's just a foundational tool,
Yeah.
one piece of the puzzle.
Okay.
But understanding it can really level up your investment game.
Okay, so I'm convinced ROI is important.
It.
How do we actually calculate it?
Hey, so
The guide mentions a formula.
it does.
Is it as complicated as it sounds?
The formula itself is surprisingly straightforward.
Okay.
It's all about the gain you get from an investment
Yeah.
minus what you put in,
Okay.
divided by your initial investment,
All right.
multiply that by 100%,
Uh-huh.
and voila, you've got your ROI.
Okay, that sounds manageable,
Right.
but I have a feeling it's not always as simple as plugging in a few numbers, is it?
You're right. It can get tricky.
Okay.
Let's take that stock example you mentioned earlier.
Right.
Buying a stock for $50,
Mm-hmm.
selling it a year later for $60, and getting $2 in dividends.
Right.
Sounds simple enough, right?
Yeah.
But what about those pesky trading commissions you paid
Oh.
when you bought and sold the stock?
Mm.
Did you factor those into your cost?
Ah, I see what you mean.
Yeah,
It's easy to overlook those hidden costs.
it is.
And what about those what-if scenarios?
Right.
Like, what if the stock price had gone down instead of up?
That's where understanding the different pieces of the ROI formula
Yeah.
really comes in handy.
Yeah.
You have to be meticulous about identifying the right gain and cost figures.
Mm-hmm.
It's not just about the purchase and sale prices.
Right.
You need to consider dividends,
Yeah.
commissions,
Mm-hmm.
fees,
Right.
anything that affects your bottom line.
Oh.
And of course,
Yeah.
you have to remember that past performance doesn't guarantee future results.
Right.
The stock market is full of surprises.
So even with a formula,
Yeah.
there's still an element of uncertainty and risk involved.
Absolutely. ROI helps us quantify potential returns,
Mm-hmm.
but it doesn't eliminate risk altogether.
Right.
It's a tool for assessing potential,
Yeah.
not a crystal ball.
That makes sense.
Yeah,
So we've talked about stocks,
we have.
but the guide also mentions applying ROI to other things like real estate
Uh-huh.
and even business decisions.
It does.
Can you give us an example of how that works?
Sure. Let's say you're thinking about buying a rental property.
Okay.
Your gain would be the rental income you receive,
Yeah.
but your costs would include things like mortgage payments,
Right.
property taxes,
Okay.
insurance,
Right.
maintenance,
Yeah.
maybe even a property manager to pay.
And I bet a lot of people forget to factor those ongoing costs into their calculations.
You'd be surprised how many people make that mistake.
Wow.
It's easy to get caught up in the excitement of potential rental income
Yeah.
and overlook those less glamorous expenses.
Right.
But those expenses can make a huge difference in your overall ROI.
So it's not just about the big ticket items.
Right.
It's about looking at the whole picture.
Exactly.
Okay.
And that's true, whether you're talking about stocks, real estate,
Mm.
or even something like a marketing campaign.
Okay.
You need to consider all the costs involved,
Right.
not just the obvious ones.
Okay. I'm starting to get the hang of this ROI thing,
Good.
but the guide also mentions that sometimes it gets a little more complex.
Right. There are definitely some nuances to be aware of,
Okay.
especially when you're dealing with long-term investments.
Yeah.
Let's talk about the time value of money, for instance.
Wait, time travel and finance.
Ah.
Now I'm really intrigued.
Oh.
Tell me more about this.
It's not quite time travel,
Okay.
but it does involve thinking about how the value of money changes over time.
Okay.
Would you rather have $100 today or $100 a year from now?
Today, of course.
Okay, why?
I could buy myself something nice.
Exactly.
Yeah.
And that's because money today is worth more than the same amount in the future. You
Interesting.
could invest that $100 today.
Yeah.
And with a bit of luck and smart choices,
Mm.
it could be worth more than $100 a year from now.
So how does this time value of money play into our ROI calculations?
Well, the basic ROI formula doesn't take this time element into account.
Okay.
It assumes that a dollar today is worth the same as a dollar tomorrow,
Right.
which isn't always true,
Uh-huh.
especially for long-term investments.
So if I'm thinking about buying that rental property
Yeah.
and holding on to it for 10 years,
Uh-huh.
the simple ROI calculation might not give me the whole story.
You got it.
Oh.
In cases like that, there are other tools we can use,
Okay.
like the internal rate of return or IRR.
Okay.
It's a bit more complex,
Yeah.
but it considers the time value of money
Uh-huh.
and gives us a more nuanced picture of potential return.
Fascinating.
Yeah.
So we're not just crunching numbers, we're thinking about how those numbers evolve over time.
Exactly.
This is way more interesting than I thought it would be.
I know, right?
Yeah.
ROI is full of surprises,
Really is.
and we've only just scratched the surface.
Wow.
There's a whole world of fascinating concepts and applications to explore.
I can't wait to dive deeper.
Yeah.
But before we do that,
Yeah.
let's take a quick break and come back to unpack even more about ROI.
Sounds good.
Okay, so we were just talking about the time value of money
Yeah.
and how it can impact long-term investments.
Exactly.
But the guide also mentioned something called recurring costs and benefits.
It does.
What's the deal with those?
Think about that rental property again.
Okay.
You've got your initial investment, the
It's-
down payment, closing costs, and so on.
Uh-huh.
But then you've got this ongoing flow of money,
Okay.
both coming in and going out.
Right.
You've got rental income coming in every month,
Uh-huh.
but you've also got mortgage payments,
Right.
property taxes, insurance,
Yeah.
maintenance,
Yeah.
maybe even a property manager to pay.
So it's not just about the one-time costs.
Right?
It's about the long game. How do we factor all of those recurring costs and benefits
Right.
into our ROI calculations?
That's where a method called net present value, or NPV, comes in handy.
Okay.
It's like a financial time machine
Interesting.
that takes all of those future cash flows,
Okay.
both the good and the bad,
Uh-huh.
and translates them into today's dollars.
Okay, so NPV helps us see the big picture,
It does.
taking those future cash flows into account.
Right.
Are there any other tools or concepts we should know about
Oh, yeah,
when it comes to calculating ROI in more complex scenarios?
absolutely.
Okay.
We've already touched on IRR,
Uh-huh.
which is a great tool for comparing different investment options,
Okay.
especially when those investments have different time horizons or cash flow patterns.
Right.
It helps us see which investment is likely to yield the highest return over time,
Okay.
taking into account the time value of money.
This is all starting to make sense,
Yeah.
but I have to admit it can feel a little overwhelming.
I can understand that.
What advice would you give to someone who's new to all of this
Yeah.
and wants to start using ROI to make smarter investment decisions?
Start by keeping it simple.
Okay.
Don't get bogged down in the complexities right away.
Okay.
Focus on understanding the basic ROI formula
Mm-hmm.
and how to apply it to different scenarios.
Okay.
You can always delve deeper into the more nuanced concepts like NPV and IRR
Right.
as you gain experience and confidence.
That's reassuring to hear.
Yeah.
So we've covered the formula,
Yeah.
the nuances, and some advanced concepts.
Yep.
But how do we actually put all of this knowledge into action?
Right.
How can we use ROI to not just analyze investments,
Yeah.
but actually maximize our returns?
That's a great question.
Yeah.
And it brings us to the strategic side of ROI.
Okay.
It's not just about crunching numbers.
Right.
It's about using those numbers to make smart, informed decisions
Okay.
that align with your goals.
I love that.
Yeah.
So how do we go from number crunching to strategic decision making?
One powerful tool is setting SMART goals.
Okay.
The guide mentions this framework,
Yeah.
and it's a game changer for investors.
Okay. Remind me what SMART stands for again.
It stands for specific,
Uh-huh.
measurable,
Okay.
achievable,
Right.
relevant,
Uh-huh.
and time-bound.
Okay.
It's a way of setting goals that are clear, actionable, and
Uh-huh.
aligned with your overall investment strategy.
So instead of just saying, I want to make a lot of money,
Right.
a SMART goal might be something like, I want to achieve a 15% ROI on my stock portfolio
Exactly.
within the next 3 years.
That's the perfect example of a SMART goal.
Okay.
It's specific.
Uh-huh.
It's measurable.
Yeah.
It's achievable, hopefully.
Right.
It's relevant to your investment objectives.
Okay.
And it has a clear time frame.
I love how this brings clarity and intention to the process.
It does.
But what happens after we set those SMART goals?
Yeah.
Do we just sit back and hope for the best?
Definitely not.
Okay.
Setting goals is just the first step. The real magic happens when you start tracking and monitoring your progress.
Okay.
You need to regularly check in on your investments and see how they're performing against your goals. Are you on track to hit that 15% ROI?
Right.
Or are you falling short?
Yeah.
This regular monitoring allows you to make adjustments along the way.
So it's like having a financial dashboard that shows us how we're doing
Exactly.
and alerts us if we need to make a course correction.
It's about being proactive and making sure your investments are working for you,
Right.
not against you.
Okay.
Remember, ROI isn't a set it and forget it metric.
Right.
It's a tool for ongoing analysis and optimization.
This all makes so much sense.
Good.
But let's be real.
Yeah.
ROI is often portrayed as this magical solution to all our financial woes.
I know.
Are there any downsides or limitations to using it?
Like any tool, ROI has its strengths and weaknesses.
Okay.
One thing to remember is that it primarily focuses on financial gains. It doesn't capture those intangible benefits, like the satisfaction you might get from investing in a company
Yeah.
that aligns with your values.
That's a great point.
Yeah.
Sometimes we invest in things because they feel right,
Yeah,
even if the financial return isn't massive.
exactly.
Yeah.
And while ROI can help you compare different options,
Mm-hmm.
it doesn't tell you anything about the risks involved.
Right.
A high ROI doesn't necessarily mean a good investment
Okay.
if it comes with a high level of risk.
So it's like a map that shows you the destination,
Yeah.
but doesn't tell you about the road conditions along the way.
That's a fantastic analogy.
You might encounter detours, roadblocks, even the occasional traffic jam.
ROI helps us navigate the financial landscape,
Right.
but it doesn't eliminate the bumps in the road.
Okay.
You still need to be aware of the risks.
Uh-huh.
Do your research
Right.
and make informed decisions based on your own risk tolerance and financial goals.
So ROI is powerful,
It is.
but it's not a magic bullet.
Right.
We still need to use our own judgment and common sense.
I agree.
I'm loving this conversation.
Me too.
But I think we're ready to wrap up this deep dive.
Okay.
What are the key takeaways
Yeah.
you want our listeners to walk away with today? So as we wrap up our deep dive into ROI, what are the key takeaways you want our listeners to walk away with today?
I think the biggest takeaway is that ROI is a powerful tool for making informed decisions, but it's not a guarantee of riches.
It's not going to predict the future
Right.
or tell us exactly which stocks to pick, right?
Exactly. But what it can do is help us assess the potential of different opportunities,
Mm-hmm.
compare our options, and see how we're doing over time.
Yeah.
It's like a financial compass
Okay.
that helps us stay on course.
And just like a compass, it's most effective when we use it actively and intelligently.
Absolutely.
We can't just blindly follow the numbers without considering the bigger picture.
We need to think about the context, the risks, and our own personal goals.
Right.
It's not just about chasing the highest ROI. It's about finding investments that align with our overall financial plan and risk tolerance.
So it's a balancing act, right?
It is.
We need to use ROI in conjunction with common sense critical thinking
Yeah.
and a healthy dose of skepticism.
I couldn't have said it better myself.
And don't be afraid to ask for help along the way.
Right.
There are so many resources available.
ROI.
Websites, books, financial advisors
Mhm.
that can help you understand ROI and use it effectively.
Exactly.
There are even online communities and forums where you can connect with other investors,
Oh, yeah.
share experiences,
Absolutely.
and learn from each other's successes and mistakes.
That's a great point.
Investing can feel intimidating,
Yeah.
especially when you're first starting out.
It can.
But remember, you don't have to go it alone.
That's right.
There's a whole community of people who are on this journey with you.
Absolutely.
So to all our listeners out there, we encourage you to keep learning,
Yeah.
keep exploring, and keep asking questions.
Keep diving in.
ROI is a fascinating and powerful concept, and the more you understand it,
Mm-hmm.
the more confident you'll become in your investment decisions.
Now that you've had this deep dive into ROI, what's the next investment decision you're going to make?
Ooh!
What opportunity will you analyze using this new knowledge?
We're excited to see you put these insights into action. Until next time, happy investing.